hopefully enjoyed the last video where we discussed a pullback strategy on the UVXY that we notified our subscribers about recently. Today, I want to share with you another strategy in a live trade that we did. To those of you who are new to my customer list, I want to share some of my trading background. I started trading at the age of 21 when I was first recruited by George Lane. He's the father of the stochastics indicator. I worked side by side with him in his research department, and I helped him in his writing of his newsletter and doing market analysis. So every day in my life, and that's 35 years ago, there hasn't been a moment where the markets haven't been at least the forefront of what I look at. And my job is to make sure that I outperform the market and share that with my clients and see them succeed just as well. Now, I've spent a lot of time doing research and using tools that I've personally developed, and I want to make my job as easy for you as it has been for me by using these proprietary indicators and these trading strategies. I hope you find benefit from this new video where I share with you how to incorporate multiple time frames and look for proper entries, stops, and profit targets. So I think you're going to love how this video works out for you, and I want to welcome you back to share with you more videos in the future. So here's to another trading strategy that you can use. Have a great evening.
Hello, welcome. Here's our new trading strategy to share with you today. First, if you could kindly take a second to read this risk disclosure. Trading is risky. There is risk of loss, and past performance is not indicative of future results. Keep in mind that this is educational in nature. All right, let's look at the strategy for today. All right, so today we have a situation.
Order filled.
All right, so there it is. We're in a 60-minute sell. The market has rallied up against the trend line of resistance, and we have a short position that just was filled on our entry. Our risk is going to be above the high of 107.50. So we're going with multiple time frames, and we're going within a trend, so the market is following that trend, and along the lines of using multiple time frame analysis to trade with. So with that development, the short position we enacted, this was the entry. Our stop loss order above the swing high, not a bad trade, and a profit target to get out. Now, we came close to the profit target, and generally this is kind of a quick scalp to go with the dominant trend of the market. We're in that bigger, higher degree time frame sell signal. There's your PPS indicator. Now, this is TradeStation, and that arrow points lower. And what that signifies, whether you're TradeStation or Thinkorswim clients who have access to this tool, it's kind of an interesting concept to go with the general trend direction. You get snapbacks, look for sell signals. And if you get the snapback and then all of a sudden you get a sell signal, as you can see, short 2 contracts right here. Not a big deal, but we are profitable in the trade so far, and we're looking to exit the trade. So going with the trend of the market, excuse the drawings, that's the concept. And for those who use Thinkorswim, remember, this is the PPS indicator, and it paints those arrows, momentum studies. It paints those arrows up and down to give you a trend direction in the marketplace. When the higher degree time frames in a sell mode, you look for shorter degree time frame sell signals. So that's one of the advantages that you have of these technical tools and how to integrate multiple time frames to make money. As a quick follow-up, the profit target was hit. The trade ensued a little bit more profit, but that was the key element of this particular setup. When we look at Thinkorswim, and I'm just going back between two platforms, when you use Thinkorswim, I mean, you have the same kind of concept where we're looking for sell signals to go with the overall trend direction of the market. The key is, how do you get in and out of a market? You go with the general trend of the market, and you should have profit targets as a scalper or swing trader. So anyway, our concept was we had a profit target. The market gave us that profit target, and we flattened the position. We'll look forward to sharing more trade ideas and strategies on how to take money out of the market. Thank you.